I'm Paulina Leiser, producer of Focus Today. Thank you for watching this video, and make sure to check our other videos at theDove.us.
Welcome to Focus Today. I'm your host, Perry Atkinson, and what a delight and an honor to have back with us our good friend, Dan Celia. He's the CEO of Financial Issues Stewardship Ministries and also the host of Financial Issues radio and television program. In fact, you can see his program right here on the Dove TV network at 1 o'clock weekday afternoons. My friend, good to see you. How you doing, buddy?
Harry, it's great to be here. As always, I sure appreciate it. I'm doing great.
Well, we are not even into the Trump administration, and it looks like Trump-elect has impacted the economy.
It sure does.
What do you think? Excuse me. What about the? Is it true that the value of the dollar is a 14-year high?
It is. The value of the dollar continues to climb up again today. So we continue to see the dollar climbing. It was when we've got to look at it from. I think it started back in August, July and August. It really started to climb. So it's not just as a result of the elections, but certainly it has strengthened quite a bit since. So yes, it is. The dollar is at an all-time high. People feeling good about the economy and where it's headed.
What does that tell you?
Well, it tells us that first of all, a lot of the pundits and a lot of the economists out there really understand how wrong they got it. They knew they were wrong in the beginning. But the fact of the matter is it tells us that we've got an entire global economy, not just America, that is very excited over the prospects of the largest economy in the world taking on a pro-growth strategies. It is going to trickle through the entire global economy, and that is why we are seeing such strength in the dollar and, frankly, the markets right now.
All right, so Ford and Apple have both announced they're going to stay home. What does that tell you?
Well, that begins to tell me that the trade policies that Donald Trump everybody was so concerned about are already beginning to work. Look, his policies, Perry, were about positioning himself in a position of strength, a position that was going to bring back not only American companies, but bring back the trading partners globally to the table and say, look, we want something fair. And I say this, I can't say for sure about Apple, but I can say it for Ford. Look, company CEOs, American CEOs don't want to go abroad. They don't. They've done it because they have a responsibility for their bottom line, and they want to go where they can get the best value for their production dollar. And what is happening is they're saying, we may be able to build the product less expensive somewhere else, but with the Trump administration, it's going to end up costing the consumer the same, whether we build it in China or whether we build it here in America. So let's just build it here in America.
That's quite a deal. Normally, after a new administration, the economy takes a couple of quarters to adjust. It's possible we see this administration come out of the chutes pretty positive. That's unusual, isn't it?
It's very unusual, Perry. It's very unusual. And look, I still think the markets are overvalued, so there could still be some adjustment. But here's what I've been challenged on liberal media where I've done interviews on this. And they say, look, even if you're right, even if Trump is right, even if this happens, it's going to take years for these policies to trickle through the economy, even if they are good, like you say they are. And my argument has been that you're wrong. It's not going to take years. It's going to be immediate. You're right about the legislation being passed, it getting through the economy. You're right about that. That is true. But just the mere idea that there's tax relief coming, that the regulatory burden is not going to be a moving target and a constantly evolving change on the whims of ideology. Just the mere knowledge that it's going to be beneficial, that things are going to get better, is enough for corporate America to say, hey, look, we're ready. We've got penned up desire to get some of this money back into the economy to get things growing, and that's going to be enough. And that's exactly what we're seeing.
Wow. So what happens to inflation, Dan?
Well, I think inflation, if we, is likely to start coming into the economy. Now, some inflation, Perry, is healthy, but if it starts getting out of hand, because my fear is, just like I just said, there's pent up desire to put money to work in the economy. There's also a pent up desire for, maybe not a desire, but the reality is inflation has been held at bay for so long that there may be some inflation that could get out of control. And the question that I have, and the thing that we're wondering, is the economic team that Trump putting together, is it going to be good enough, wise enough, to be able to do all the things they want to do and keep inflation at bay? And I think that's going to remain to be seen. I feel as though that we're not going to have anything near hyperinflation. I don't think that's going to happen. But my hope is that the inflation that we see coming in is going to coincide with growth that is going to continue to happen.
Okay.
If that happens, the inflation impact won't be as bad on us.
So what role does interest rates play in this? Say, I don't know what happens to Yellen. I would imagine she goes and somebody else gets put in there. But how do they regulate interest rates in light of what Trump wants to do and to hold off inflation?
Yeah, so interest rates are going to go up. There's no doubt about it. So we're going to and they need to go up. As interest rates go up, that means we get a stronger dollar. And that also could mean, as those interest rates go up, it's going to lead to some interest rate inflation. But again, we've become spoiled with low mortgage rates and such for a long time. But the reality is 4.5%, 5.5%, when we're getting 3.5% to 4.5% interest on our CDs, is a reasonable expectation. But what we have going on globally, in the bad economies globally, is that the stronger dollar that higher interest rates are going to create are going to be a very good thing for our economy, because we're going to see money start to flow in from all over the world, as it already has started, into this economy because of the strong currency. And that's going to keep inflation at bay as well. So I think there's going to be some balance here that in the long run is not going to be so bad. I know liberal media doesn't want to talk about that and doesn't believe that's going to be the case. But I think that Trump is doing a wonderful job putting together an economic team that understands all of those things and is going to use it to their advantage.
Wow. All right, back to the market just for a moment, Dan. When does real value catch up with inflated value?
Well, I think what's going to happen, Perry, is that there's a possibility. Remember, I just said that the markets are still overvalued, and it is likely that we're going to see a correction in that overvalue. But there is a possibility where the markets will believe that growth is going to catch up to the value that stocks are today. that means there's somewhat of a slowdown in the rate in which stocks are going up. But there's not going to be a dramatic pullback or correction in those stocks because they're going to be anticipating growth, and that growth is going to catch up. I'm not in that camp, by the way, but that is a possibility. I believe we're going to see a correction that is going to be coinciding with and followed by growth in the economy so that they get back up to where they are today. So I think that's more likely. I hope I'm wrong about that, but I think that's more likely to happen. So we are a minimum of 12 months away from growth catching up to the value of where we are now in stocks.
Before I got to let you go, Dan, are you still recommending stay liquid for a little while?
Yeah, so what I'm recommending, yes, is to be liquid, to have good, strong cash positions, but to begin to wean in little by little into the markets. Because here's what I believe under this administration now, is that if we have this correction, I still feel very good about the abilities and the policies, the fiscal policies coming out of D.C. and the policies of pro-growth that we're going to be able to get through the downturn pretty smoothly. So I feel even if you start to wean into the markets a little bit, keeping that 30 to 40% cash position, some liquidity there, I think you'll be okay even in a downturn.
Very interesting. Dan, you're a delight. Thank you, my friend. And let me say to our viewers and listeners, you can catch Dan's program every weekday at 1 o'clock right here on the Dove Television Network. You can go to financialissues.org. That's his website. Great resource. And check out his ministry, Financial Issues Stewardship Ministries, FISM, and support what he does. Thanks, buddy. Let's stay in touch, okay?
Thank you, Perry. I look forward to being with you again. Thank you.
All right. God bless. We'll be right back.